Hello, everyone. My name is Brad, and welcome back to the Dividend Reaper YouTube channel, where I talk investments, and more investments. Today, I want to talk about stocks that I've entered into new positions in for the Dividend Scythe portfolio, which primarily is my dividend investment portfolio. Of the first of those two stocks is UPS, United Parcel Services. I picked up 20 shares at 107.35 per share. And secondly, I picked up shares of GE, General Electric, 74 shares at $13.59 per share. This adds an additional $108.32 annually to the projected dividend income, which now brings the projected annual to $1,854.07, which breaks down to an average monthly of $154.50. Overall, I'm really happy about these new two trades. UPS is a brand new holding for me. I have never held UPS in any of the portfolios that I've had previously, or and I feel stupid for not having looked at them sooner because I really like the business model. I like how it works. I can easily understand how it makes money. The future looks bright for shipping. And until we figure out a better manner of getting goods different places around the world, there's not a current alternative. And there's a pretty high barrier to entry, too, for someone just up and raising the cash to start up a huge logistics business. Overall, I feel like it's kind of a no-brainer, and the fact that they've been increasing their dividend for I think 9 years now, I feel pretty safe with this one. But just so you can see it as well, I'll go ahead and I'll pull up another window here. This is the current stock profile for United Parcel Service (UPS). The previous close $6.99, and the opening was 107.48, sitting just right off the 52-week range low, and EPS 5.31, PE ratio 20.18 times, equating to a 3.39% dividend yield. Really not bad. I think that a lot of investors obviously see the worth of this company, which is why you have to pay the price of what you need to pay to get into this. But at this point in time, with the amount of money that I was working with, I finally felt comfortable to pick up a couple shares. So obviously, I did end up jumping the gun at UPS. Finally, I'll go ahead and I'll switch over to GE, General Electric. General Electric was trading at pretty much the bottom of its 52-week range. I think I sold at like, oh gosh, I want to say it was like right near 30 or just above 30 is what I was able to sell out originally when I was holding this. I think this was like the first stock I ever owned. But I sold out at its high when I saw some danger flags go when they decided to stop raising their dividend. And then obviously, when the dividend cut came, that just further propelled the stock downward due to short term headwinds. I think now that the company has, I feel like, righted the ship, or at least they finally have a direction. And with the company being such a huge conglomerate, it just has so many different directions that this company can go to dig itself out of a hole. So I just don't see GE going anywhere. And I think that we have finally found the price floor for GE at this current day. Obviously, the EPS not looking that great on it. Uh, not even showing a PE ratio currently, but obviously the annual dividend showing to 3.56% currently after the dividend cut. Um, if you are talking GE, you're talking about a company that you are slightly um, doing kind of a speculative investment on because the numbers don't show good things right now. I'll be honest with you. This is a very, very, very speculative play on my part. But as an investor, anytime that I'm looking to jump into something that is at least even slightly above the normal speculative investment that I would make, I'm looking to go ahead and use a smaller amount of money. Because if this thing decides to just completely capsize, I won't lose a ton of money on this thing. And I'd be hasty to suggest to any one of my friends to do any different. Just like, if you've seen any of my previous videos on the Intelligent Investor, which again, I will be uploading even more of them. I've been reading through chapters again, fine tooth comb. Chapter 2 will be ready soon. Uh, Benjamin Graham, smart man, way smarter than I am, talks about this, I think, in chapter 1 about speculative investing. This is exactly what he was talking about. If you are going to do it, invest a small amount of money in it. So that's where basically GE is on that. That being the case, I feel like the dividend site is sitting in a pretty cool landing zone right now. I feel like it's poised for a good direction. It could take off, but it could also pretty much just stay flat during this current flat period in the market. We're just going to have to wait and see. But I want to go ahead and let you guys all know when I made an update to the portfolio so that I can be better about telling people when I'm buying, when I'm selling, what I'm trading, what I'm thinking about trading, so that way you can keep up with everything that I'm trying to do with the market in the condition that it's in. With that being said, I don't want to talk too long in this video or take up too much of your time. Keep it just the meat and potatoes. I will catch up with you later this week in another video, hopefully when I'm able to go ahead and get the next installment of the review of The Intelligent Investor by Benjamin Graham up and running. In the meantime, if you like this video, don't forget to like, comment, and hit that subscribe and bell icon to get updated whenever I go ahead and post videos. Until then, though, I'll see you guys later. Take care.